welcome to our webinar. We're going to give all of the participants here a few more minutes to join. So we'll start in just a few. In the meantime, while you're waiting, if you'd like to introduce yourself in the chat, we would love to hear from you, where you're from, what you're working on. Let's get to know each other a bit. Hi, everyone. To those who are still joining, we're just going to wait another minute, and then we will get started. Again, feel free to introduce yourselves in the chat. Let us know where you're tuning in from and what you're working on. All right, guys, let's get started. First of all, thank you all so much for joining us today. We are very excited to be here and to get to have this conversation with all of you. My name is Chev from ThinkUp, and I will be your host today. Before we introduce today's speakers, I just want to give a quick note. This is an open, no filter conversation. Feel free to ask us anything about your startup journey, your product, funding, how to get more out of ThinkUp, anything that might come to mind during this conversation. On the bottom of your screen, you should see a Q&A button. Feel free to drop questions there, and we'll go over everything at the end of our fireside chat. Now, let's get started by getting to know our incredible speakers that we have here today, who I have the opportunity to work with and learn from, and I'm very excited to share that opportunity with all of you today. So let's get started. Ohad, would you like to introduce yourself?
Yeah, of course. Hi, everyone. I'm 𝐝𝐲𝐝𝐿. I've been running my own family office for the last 20 years, investing in early stage and late stage startups and companies in various industries. 8 years ago, I've created my first startup in the smart cities domain, and ThinkUp is my second startup. And I'm happy to be here and to support you, other entrepreneurs, with my experience and my know-how.
Excellent. Thanks, Ohad. And Nir, can you tell us about yourself?
Yeah, sure. Thanks, Chev. Hi, Oad. Nir Melamoud. I've been, for the last 2 decades, I've been working, growing businesses and working together with founders, B2B, B2C businesses on their go-to-market methods, growth strategies, and investment readiness. I also had the chance to run a fund, a syndication fund, for supporting early stage businesses or startups. And I'm super happy to be here and looking forward to hear your questions. Thank you for joining.
Amazing. Thanks, Nir. So first thing first, let's talk about the agenda. What are the topics that we're going to cover here today? First of all, a quick reality check on why most startups fail. Then we'll talk about what it actually means if you're building the wrong thing and how to catch that early. And finally, we'll talk about how to craft the kind of story investors actually want to hear. After that, we'll open the conversation to all of you for questions and answers. So again, throughout the session, if anything comes up, feel free to drop your questions in the Q&A box, and we'll make sure to get to as many as we can. Okay, before we really dive into the conversation, we want to know who we're talking to. So on your screens, you should see a poll pop up in a few minutes, hopefully a few seconds. And excellent. Where are you in your startup journey? So the options we've outlined are you're working on an idea, you're actively validating, you're building your product, or you're scaling and growing. This will help us understand where exactly to take this conversation. So select one of the options, the one that's most relevant to you. We'll give a few seconds for everyone to answer. And then we will move forward. Excellent. Okay. It looks like we're split between working on an idea, building a product. We've got a good mix of founders in different stages here, which is excellent, which means that this conversation will be relevant to most, if not all. So the first thing that we're going to talk about today in our fireside chat is our reality check. Why do most startups fail? This section is all about the early stage pitfalls. Nir, can you take it from here and tell us a bit about this topic?
Yeah, sure. So thanks, Chev. Most startups fail not because there weren't good ideas. Most of them fail because they were built before being validated. Some founders assume that if you build a great product, users will come. And that's unfortunately rarely the case. A lot of startups spend months, years building a solution. And by the time they launch, they realize that they either misread the market or they built something nobody really wants or needs or will pay for. This is why so many startups run out of money before finding a market. Now, there are two quotes I kind of resonate to this situation. The first one is Y Combinator one, the largest accelerator in the world, and they say build something people want. And that correlates with validating. You have to validate before you build. The second quote is of Uri Levin. He is one of the co-founders of Waze, the navigation app that Google bought in 2013. And he wrote a book about falling in love with the problem. Falling in love with the problem. I really recommend reading this one because it iterates around the importance of knowing, exploring, realizing what the problem is before building a product basically. So if you don't take the time to validate, you risk wasting all your resources on solutions that people might not pay for.
Excellent. Thank you, Nir. And Ohad, what's your take on this?
Yeah, we recently came across two startups. One in the fashion tech, one is in the cyber. Now, the fashion tech team, they've built a great product, looks great, great user experience. But when I asked them, do they have any proof that people will pay for it? There was a silence. They didn't validate it. They didn't check if someone would pay for it. Now, on the other hand, the cyber team, they went out, they interviewed almost 30 people, potential users, potential customers. They had a test landing page, and they had a waiting list of almost 50 people. So guess who got to their first customers? Guess who got funded?
So the takeaway here is that the best founders don't start by building. They start by validating. The next thing that we're going to talk about is the question on every founder's mind. What if you're building the wrong thing? In this part, we'll talk about how to avoid that mistake by validating early and validating often. Ohad, can you kick us off on this one? How should founders be thinking about this issue?
Yeah, so there are a few simple ways to validate your idea. You don't have to talk about your product, the solution. You don't have to build it. Just try and go on social communities or post items about the problem. Start a discussion about the problem. See if it resonates with anyone. Go and attend some communities. Events, meetups, go to some industry events, talk to people, listen to them. Don't talk about your solution, just hear them out. What's bothering them? What are the pains? And try maybe launching a test, a mock-up landing page. See who signs up. Maybe someone are willing to provide their credit card details to be part of the pre-order line. So there's lots of ways to validate your idea.
Amazing. Really great points, Ohad. Thank you. Nir, what's your take on this? How do you approach early validation?
Yeah, I really like starting small, low-risk experiments. As Ohad said, after you've seen early demand through interviews or mock-up or wish lists, the next step, still without writing a single code, is to create a mock-up. Just a few screens that show something about the product that how it could look like, to test with users. So, and really today they're amazing too. We're in the midst of a crazy era. You know, the generative AI is creating new tools like Lovable and Base 44 that can actually build a working MVP. You can build a working MVP using AI just by prompting. So really, I truly recommend testing these out. You'll be amazed by what you can achieve, and then go ahead and test with users. Once you got something in front of users, you're not asking, would you use that? That won't be the, that's not the right questions. You should watch how they interact, what they click, how do they react? Are they excited, confused? It's fast, it's cheap, and it gives you real insights before you build anything real.
Excellent. So listening to both you, Nir and Ohad, it sounds like the main takeaway here is that if you can't get interest before building, you're solving the wrong problem. The next thing we're going to talk about is the story that investors actually want to hear. And we're so lucky today to be hearing from two investors who can actually tell us from their experiences about the story that investors want to hear. Nir, would you like to kick this one off?
Sure. So we talked about validation, but validation alone won't get you funded. Okay, investors don't invest in cool ideas. I mean, they do, but not only on that. They invest in businesses that can thrive and grow and make money. And that means that when you pitch, your story isn't about your product, isn't about the problem and the product that you built. I see so many founders that pitch for talking 10, 15, 20 minutes on the product. And that's not the way to do. Investors don't care about your tech unless you have a clear growth path. That is super important. Now, from the investor point of view, there are three main things that you're trying to understand. The first one is how big is the market, especially venture capital. They're looking for large opportunities. That means big niches within industries, talking about billion-dollar markets. The second thing is what's the plan for scaling? So what's the next milestone? What's the next, and how do you achieve that? Do you have a convincible story or convincible plan to reach that milestone? Would the investor want to know if the money that they invest now will help you get to this next milestone that you project? So you need to be convincing and appealing. And the last thing is these KPIs are big enough? Do they reflect an upside, a significant upside? Could realistically become 10 times more than they are today? Your growth trajectory has to be appealing.
Excellent. Thank you so much, Nir, for sharing your perspective. Ohad, is there anything that you'd like to add for that from your experience, especially when it comes to how founders tell their stories?
Yeah, so maybe I can touch upon two additional points. One is the business model. You have to be clear about where the revenue will come from, who will pay. It doesn't have to be overly complex. Keep it simple. One revenue stream, one type of customers, that's great. And the other thing is the team. It's the fit. Do they have what it takes to solve the problem, to create the solution? Sometimes it's technical, sometimes it's more product expertise and familiarity with the customers and the exact pains. And the other thing is about the team fit as in terms of complementary skills. You have to have quite a few facets of creating a startup. It's the product, the tech, the sales, the marketing, the partnerships. So investors want to see a holistic team with complementary skills.
Excellent. Okay, thank you, Ohad. So the takeaway from this topic is that a great startup story is not about how you're solving a problem. It's about how the venture becomes a functioning, high-growth business. Now, I've seen everyone has been sharing questions in the Q&A and in the chat. We're going to stop now and answer some of those questions. Feel free to continue to ask right now in the chat as we're going through these, and we will get to as many as we can. So we have one question here from Kelsey. What tools do you use to validate? Nir, do you want to expand a little more on this? You touched on Lovable and Base 44. Maybe you have some other insights here.
Yes, it really depends on which task and what tool to which task. I was referring to building a prototype or something, screens or mock-up or something that you can present to potential users during your testing. And as we said, we're talking about Lovable and Base 44. Now, the beauty with this is that it's prompt-based. Okay, all you have to do is like give an abstract prompting, like a language, like the way you talk in the text box, and it creates amazing things. And you actually can do an iteration. So if it didn't do it in the first iteration spot on, you can ask changes again, human language, and it just create a mockup. And believe me, these tools are amazing. I really recommend testing these. Now, in terms of other tasks, okay, for example, finding potential users or interviewees. This could be either social media. It could be LinkedIn. It depends on the vertical and the domain that you are at. And we can talk about other tools, but it really need to be more task specific, I would say.
Excellent. Thank you, Nir. Next question is from Senket. He asks, what are the qualities of a great founder? Ohad, can you take this one?
Yeah, I think you have to be curious. You have to be more open to other views. You have to be a good listener. You have to be a product guy at first. User research, interview the potential customers, hear them out, make sure you're not biased. And you have to get to know them perfectly well. So it's all about listening, taking notes, and being flexible. Maybe your assumptions are not right, and you might have to pivot, you might have to change. So curiosity, being a good listener, and flexible, I think these are good three traits to start with.
Excellent. Thank you, Ohad.
Yeah, before we move on to the next, can I add, if I may add to what Ohad just said, I think that willing to work hard is something that is required as a character. And the reason I'm saying that is because sometimes when you don't deep dive into the challenges at the beginning and you move forward, you only realize later on in the process when you're trying to meet potential customers, when you're trying to meet the market, when you're trying to meet investors, and that late in the process, after you maybe spend resources and time and effort, just to realize that you made some early mistakes. So it's really important early in the process to have a mindset of working hard, not round corners, and deep dive into the challenges that you can't.
Excellent. Thank you so much, both of you. We have a really great relevant question here from Zin Leo. I know it's probably depends, but how many customer or user interviews are a reasonable number to start with for validation? Nir, do you want to take this one? I see you getting excited about this topic.
Yeah, that's a great. Now, I guess that the number that I'm gonna flag with is gonna maybe intimidate some founders, and that a little bit resonates with the working hard question before. I think that 30, 40, or 50 won't be an off number. meaning that you have to meet a lot of people from your persona, and sometimes the first persona or user that you interview or user type that you interview, you will later, after maybe 2 or 3 or 5, will realize that it's not the right persona because the need is not significant, and it maybe not necessarily fits to your product or solution projection. And then you need to go get back to the drawing table and find a new user and then interview them, the new user type. And then you have to interview 5, 10, 15, 20 until you feel confident enough that you found out the real needs that needs to be solved for them.
Excellent. Thank you, Nir. Ohad, do you have anything to add there?
Well, some people like to flag with the number 100. It depends how strong the signals that you're getting. I think if you're going to interview 10 people with strong signals, I think you feel confident of moving forward. But usually it's more difficult than that. And you might need to interview, as Nir said, 30, 40, 50. You're going to get various signals until you get a strong signal.
Excellent. Okay. Our next question is from Tatiana. She asks, we've seen early traction with hundreds of signups, testimonies, and strong engagement. What signals do investors look for to know when a startup is ready to scale internationally?
Chef, can you repeat again the numbers, please? The numbers.
She didn't.
How many users and clients?
We don't have numbers or hard data here. She's saying anecdotally, we've seen early traction, hundreds of signups, testimonies, strong engagement.
Yeah.
What else are investors looking for to know when a startup is ready to scale?
Yeah, so scale is a tricky word here. So there's a point or a milestone in the journey that the jargon in the startup world called product market fit. Call it a product market fit. Product market fit means that you as a business, as a founder, understand the way to reach the market in a systematic way, okay? And then all you have to do next, after you reach that milestone, is just to inject more money because you know you can make much more money. I hope I'm clear on that. Meaning that you found a market, you found a need, you know how to message to your target audiences or to sell to your market, to your target audiences, and then you just need to scale, okay, with money. Okay, and then you get investment and so on and so forth. So your task is, as a founder, is to convince the investor that you have the equation set, meaning you understand how exactly, and you can show a process or a proof to a process that if you inject more money into it, it will then lead to more revenue, sales, clients, so on and so forth. And that point called product market fit. When you reach that point, and it's hard to know when you're there, that's where you should convince or put most of your effort to bring in new investors and fundraise. Yeah.
Excellent. Thank you. Our next question is from Uday. How can I determine my company's valuation pre-MVP? Ohad, do you want to take this one?
Yeah, well, that's a tricky one. I would say it's kind of an art, very flexible. Depends a lot on the founder's background and their experience. The more experience, the higher the valuation. If we're talking about SaaS software companies, it could range between the area of $3 to maybe $10 million pre-money valuation. And I think if you get some strong signals like a waiting list or pre-orders, your valuation could be much higher. But again, this is roughly the range, and it mostly depends on the founder's experience. Maybe if you've got some example benchmarks of other transactions, other deals, other fundraise that are similar to yours, that could be a good starting point. Yeah.
Excellent. Nir, do you have anything you want to add on to that?
Yeah, so it's a kind of a side question to that, or answer to that, is that you need to be cautious about raising in a high valuation early on. Okay, because again, as Ohad said, it's tricky because you're not necessarily basing your valuation on real stuff. It's more about the team, the quality of the team, the potential of the market, and so on and so forth. But eventually, and then if you start early with a high valuation, that means that each and every next fundraising round that you're going to have will have to support high valuation. That means, for example, that in your pre-seed you have 10 million valuation, then the seed round will have to be something between 40, 50 million valuation, which is high for seed round. Okay, and then the next one would have to be like 150 for an A. So without getting into the math and the numbers and why that happens, starting early with high valuation is like a trap. So you need to be aware of that.
Excellent. Thank you so much. Let's take two more questions and then we'll move forward. So Munawar asks, what about B2B products for early validation? How many potential customers should I reach out in that scenario? Is it the same as B2C, or is it a different ideal number?
It's much lower, obviously. I think we're also talking about, in terms of product market fit, it's still $1 million ARR, but that could be reached within, 10 to 15 customers. Deals are much bigger. Annual customer value is much higher than consumers. So it could be in the range of 10 to 15 deals. Some of them could be as big as 6 figures. That's and if it's a well-known brand, tier one global brand, that's also important in terms of validation.
Excellent. Thank you, Ohad. Okay, we're going to have our last question is a great question from Julie Kim. Do we need a fully built product to secure funding, or is a prototype enough? How should we pitch to attract investors? Does a strong demo suffice, or is a compelling pitch deck just as effective? What materials should we prepare to maximize our chance of success? So to summarize, do we need a fully built product? How can we pitch to investors?
Yeah, fully built product again is a term that is a bit tricky because first you never have a fully built product. You're always developing. So I would say I like to call it like a commercial MVP. So it's something that has enough value to charge for, like the minimum value that is worth charging for. Okay, that is one. Now for pre-seed, okay, now we need to bring in like different funding rounds and expectation of investors to answer the question good enough. So for pre-seed, it's fairly normal to have a prototype. That means not even an MVP, a commercial MVP. It could just mimic the core action in your product or core value, but it doesn't necessarily have to be a complete product, and that's fit for pre-seed investors. Okay, pre-seed investors are usually either private people called angel investors or VC funds, so venture capital funds that are focused at that early stage. Then if we move forward for seed round, you are expected to have what I called commercial MVP at least, if not more than that. So it needs to be more product-backed financing round, and investors do look for that. And again, just to close all the points here, at the early stages, you need to have a good pitch deck, okay, to support your vision, that supports the claim. For example, if you have a strong team or you have a solid, convincible roadmap forward, maybe a financial model that supports your plans, and it needs to be, it's more based on the pitch deck and maybe some prototyping rather than a solid product. Then on seed, and of course on A round and series, you need to have a product there. Sure.
Amazing. Thank you, Nir. Ohad, do you have anything you want to add to that?
I think in terms of creating, I think it was about
If in
securing
order
the funding.
does she need a fully built product, or is it?
Right. So again, it depends on your experience and your background. If you come from with a great experience or technical experience or academic, background with some technology or IP, you don't need product, a built product. Investor will invest in you. But if you don't have anything special, any competitive advantage, any great and unique asset that you're bringing with you, investors would like to see product, some traction, a few signed contracts. That would be necessary. So it depends on your background.
Excellent. Okay, thank you both so much. I see a lot more questions in the questions and answers here, and a few specific requests to meet with Ohad or Nir to discuss your specific idea further. I'm happy to share that as an attendee of this webinar, you are eligible for a mentorship session with one of our startup success managers or with Ohad and Nir. And we'll send you an email after this session with more information about that. So for now, let's move on to talk about the closing. What are the takeaways? What have we learned from this session? So the first takeaway is validate before you build. Second, if there's no interest, you're likely solving the wrong problem. And third, investors fund proof of demand and scalable business opportunities. They need to see the numbers. Nir, do you want to walk us through quickly how ThinkUp can help use these takeaways to help founders succeed in building their startups?
Sure, thanks, Shev. So if you're wondering how to apply everything we talked about today, ThinkUp is built exactly for that. You can use it to structure your process, refine your ideas, and make sure you're staying investor ready at every step. We offer a range of tools, processes, including customer discovery and product concept, competitive analysis, along with tangible assets like pitch deck created for you as you go. You work digitally, and it's created for you. And on top of that, if you need any help, our mentorship is available for you. Reach out, ask questions. We have chat. We are available to you. Ask questions, and don't hesitate to get feedback along the way. Always.
Amazing. Thank you so much to you, Nir, to you, Ohad, and to all of you for coming. We really appreciate you giving us your time and your attention here, and we hope that this has been helpful to you. And we'd love to stay connected. First of all, you can register by scanning this QR code to the ThinkUp platform for free. For now, still free. Join us on LinkedIn to find out about more webinars on similar topics. And lastly, as we said, you're eligible for a free mentorship session. We'll send those details out in the coming days along with this recording. So again, thank you so much. And we look forward to building together with you. I hope everyone has a great rest of your day. And Thank you again.
So